All right, y'all, how's it going today? So, today I am going to be talking about Iron Condors and how you can profit off of them, what I look for when I'm setting them up, strike prices, expiration, all that stuff. So, first let me talk about, the expiration length that I usually use. So, let me switch over here to Thinkorswim. So most of the time, I'm going to use like 4 to 8 weeks to expiration. There are times where I'll do, 2 to 3, but anymore, I don't really go much less than 3 weeks to expiration. There's been, times in the past where I did 0 days to expiration Iron Condors, and they work for a brief period of time, and I don't know. I just kind of got away from those. They're a little risky, and I just gravitated what works best for me, and that's like that 4 to 8 week range, right? And those require a lot less management. They're a lot less stressful. They're exposed to a lot less gamma risk. Okay, so me personally, I wouldn't recommend doing less than like 3 weeks to expiration. But if you were to set one of those up, I would look at, so we'll go 3 weeks out in the options chain. That's about 140 point expected move. So you can go out to that. So on the upside, you would be looking at 42.50, and on the downside, you'd be looking at, about 39.60-ish. And you can also look at the deltas too. A lot of times I look at the deltas, and more times than not, you're safe. You can't go wrong going with like 20 deltas, and that is about what it is on the downside here. So let's go 39.60. So that's about 20 deltas. And then as far as the width goes for SPX, I typically do like 20, 30, even as wide as 50 in the past. So let's do 25 here. That's kind of a standard range for me. And then what did we say on the upside? 42.50. So in what delta is that? That's about a 17 delta there. Okay. So let's see what this looks like. So so about 740. So you want to look to, at least for me, I look to collect about a third a width of the strikes, right? So if it's 25 wide, I want to collect 7 to 8 credit, right? I'm not one of these guys that collects like a credit that's like $1 for a 10 wide or a 20 wide. Like, to me, that's, I just don't like the risk reward ratio on that. But let's see how it looks on here. Sell a call, buy a call, sell a put, buy a put. Okay. So these are the long puts. Okay, so we're going 42.50. Oop. And then this was 42.75. Okay, and then what did we say on the downside? 39.60? Yeah. And then 39.35. Okay, cool. So let's make this a little bit wider. Yep. So yeah, we're looking at about 740 credit here. So max profit is 740. Your max loss is 1,760. Okay. So what I'm interested in seeing here is how this moves over time, right? So what's this going to look like by Friday if I put this on at Monday, right? So if SPX is right, between 40.60 and 41.20, I'm going to be up $200 on this play, which is pretty good, right? So, you're about a week later on a 3 weeks expiration Iron Condor, and you've already collected, a third almost, but more than a third of the premium, or almost a third, sorry. So, and then by next Wednesday, you've collected almost more than half, right? If you're in that same range, okay? And your break even at that point by next Wednesday is these blue lines here. So you're at 4,239.93, which, is definitely a range I can see us in, actually. So, I don't mind this trade, actually, considering I think it's possible we may chop at least for the next week, and then maybe ramp up from there. But let's also see what a drop in IV does, right? So if IV drops 5%, well, then you're collecting even more credit, right? So now you're up $674 instead of, a little bit over 400, right? So, that's an important thing for me to consider when I'm putting on Iron Condors too, right? Is what do I think IV is going to do? Do I think IV is going to drop from here? If so, then I'm putting on an Iron Condor, okay? If I think IV might go up, then, maybe you don't want to put on an Iron Condor. Maybe you should consider putting on like a calendar or a double calendar or a diagonal, something like that, something that's long Vega. Iron Condors are short Vega, meaning we make money when IV drops. And you can see here, right, like if it's right at the midpoint, we're up $674 without the drop in IV. So we'll go back to Wednesday as opposed to 450, right? So quite a bit of difference there just from the drop in IV, okay? So, and again, like I said, like you can do, I know some people that do like 7, 10 deltas, okay? So what is, let's go to 10. So what does 10 deltas look like? So 38.75 on the bottom. 38.75 on the bottom. And then 42.90 on the top. So we'll just call it 4,300. So 4,300 and 38.75. Okay. Oh my gosh, okay. Okay. So now we're collecting a $380 credit for the same width for the same expiration. So we're collecting, about half as much, right, on one of these 10 deltas Iron Condors, okay? So let's just say, by Friday, how much we're going to make? So about 190, right? And then your break-evens by Friday are 39.97 and 41.86, okay? And then by next Wednesday, so we're collecting about $300, okay? So you're collecting about $100 less than if you were doing the 20 delta, right? At the same kind of price range, okay? Right at that midpoint, okay? And the break-even points are 42.16 and 39.74 for this setup, right? So, and I'm just curious. So let's say we just do 10 wide. Okay. So we're only collecting a 165 credit. Okay. So what is it's about 125-ish. Okay. So, yeah. But yeah, I'm going about 25 wide most of the time on these Iron Condor setups, okay? And it also depends on when I think we're going to range bound and for how long, right? So if I think like just this upcoming week we'll be range bound and then move up, then I'm going to put on an Iron Condor like this, okay? If I think we're going to stay range bound for potentially weeks, then that's when I'm going to put on one of these, like 8-week to expiration Iron Condors, okay? So we would go out to the end of May, okay, and we're looking at the expected move is about 265, okay. So we're looking at, about 43.75 on the top, okay. Which should be about a little bit less than 20 deltas, I'd imagine. Okay, so yeah, it's about 16.5 deltas there, okay. And again, I'm going to go about 25 wide, okay. And then on the bottom, yeah, so probably, so we'll go 38.75 on the bottom. And sometimes, if you want to skew these a little bit more bullish, you can choke up those deltas so they're a little bit higher, okay? So like if I'm more bullish than completely neutral, I might put on, say, 20 deltas on the call side and then do like 31 deltas on the put side and put on 4,000. But let's see what the 38.75 to 43.75 looks like. Okay. And so we want to do, got to change all these expirations. So we're going 43.75 to 4,400. And then, yeah, so same strikes from the 10 delta for 3 weeks, basically. Okay, so this is what we're looking at here. We're collecting about 795 credits for a 25 wide, which is pretty good, right? So as long as SPX stays between 43.75 and 38.75 over the next, 4 to 8 weeks, we're going to be pretty happy, okay? And how does this look, after a few days? So, let's go out to, say, Friday. Right, so, after Friday, if we're at like 40.50, we're not going to be making much money. We're going to be up like $100. The upside, this is interesting. So the upper break even by next Friday is actually 41.71. So, if we end up going to like 42.75, this will actually be down about $300. We're not really threatening the upper strike at all, but we're still going to be down about $300, right? Now, let's see what happens if IV drops, because IV probably will drop if we move up that much. Okay, so let's say IV drops down like 5%. Now that's about 42.60. So that helps, right? And most of the time with that move up, we will see a drop in IV, okay? So, your break even at that point is 42.63 as opposed to, like 41.70. At 4,200, if we get that drop in IV, we're up $268, okay? So let's see, like, where we're at by about 2 weeks down the road, right? So we're about $500 profit if we're at the midpoint and IV drops, okay? So, but if we're not with the IV dropping, then we're up about $180, okay? Now, and most of the time with these Iron Condors, I'm looking to collect about 50% of the credit received, but sometimes I'll take them off as early as 25%, okay? So, you just kind of have to read it and, determine your risk reward and assess your risk management. But most of the time I'm taking these off 25 to 50% of the max profit, okay? So let's see where we're at after about a month, right? And most of the time with these 8-week to expiration Iron Condors, I'm holding them for about 3 to 4 weeks, right? So at that point, you're going to be collecting almost half of the profit, assuming it's in the mid-range, okay? And again, if we get a drop in IV, of even just 4%, well, now we've collected $550, right? And we've reached 50% profit at the 42.21 area, right? And then on the bottom side, 40.27, right? Now, most likely, if we drop down here, we won't get the IV drop. IV will probably be going up at that point. But, if we do start to drift up, then this is, what we're looking at, okay? But like I said, if I want to be a little bit more bullish skewed, then I would do, like the 30 deltas, like I said.